What is up, everybody? This is Stock Market Education, and today we're going to be going over how to find the perfect stock. So let's jump right on into it. The first thing you're going to want to do when you analyze a stock is you're going to want to look into the financial statements. Okay, so what financial statements are their formal records of financial activities for any company. The first financial statement that you're going to want to look at is the income statement, and you're going to want to see if they have increasing revenue and increasing net income as well. So let's look at an example over here. So we're looking at Facebook's income statement right now, and you can see that their total revenue has increased annually every single year since 2015. And then if you scroll down to their income statement, you can see that their net income also increased every single year substantially since 2015. The next thing that you're going to want to do is you're going to want to look at their balance sheet, and you're going to want to see if the company has more cash than they have debt, and if they have more assets than they have liabilities. So sticking with Facebook, if you go into their balance sheet, you can see that they have $10 billion in cash, and they have no short-term or long-term debt, but they do have $820 million of accounts payable, which in a sense is a form of debt. So they clearly exceed the cash is greater than the debt category. And then if you look at their total current assets, they have about $50 billion in assets. And if you compare that to their total current liability, it's only $7 billion in liabilities. So they pass both of those tests. And the next thing that you're going to want to do when you're looking at a stock is you're going to want to see if they have positive cash flow from operating activities. And the reason why you want to look at this is because it measures the amount of cash generated from business operations. And it's a very good indicator as to whether or not a company can grow or maintain its operations. Looking back to Facebook as an example, you can see that their total cash flow from operating activities has increased annually every year since 2015. So this suggests that they can still grow their business operations. And the next thing, which is probably the most important thing that you're going to want to do, is you're going to want to read the company's 10K. And the 10K will give you a background of the company as well as give you the mission and vision of the company. And for some of these larger companies, the 10K can be well over 150 to 200 pages long. So I'd first suggest start looking at the business section of the 10K, because this will give you an understanding of the business model of the company and how the company is run. And then secondly, what I would do is I would read the risk factors to see what will affect the stocks in the future. And reading risk factors is important because they are good indicators as to whether or not you should sell the stock. And in addition, the 10K provides the actual financial statements that are reported to the SEC. And this is important because financial statements have notes that go along with them. So these notes provide why some numbers have been changed. So why cash has decreased or why liabilities have decreased. Any reason why there have been changes in the financial statements can be found within the notes in the 10K. And after you read the 10K, you're going to want to read the company's 10Q. And the company's 10Q is very similar to the 10K, but it's the company's most recent numbers. And by most recent numbers, I mean it's the most recent financial statements of the company that they put out every single quarter. And that is very important because you want to stay up to date with these companies that you're picking. And in addition to that, it also updates the risk factors. So in case you have to sell the stock for any risk factor reason, it will be provided to you in the 10Q. And the last thing that you're going to want to read into a company is the 8K. And the 8K is a report of any major event that could affect the company. So this would include acquisitions, mergers, change in board of directors, or stock repurchase programs. And the reason why you want to read the 8K is because any of these events could positively or negatively affect the company over time, which would in turn change the stock price over time. So you really want to pay close attention to any of these major events that happen to any company in the future that you want to invest in. And after you look into the company's financial statements, their 10K, their 10Q, and their 8K, you should have a pretty good understanding of how the company runs and where they're going in the future. And you should be able to make a decision as to whether or not you should buy the company's stock or not. Thank you guys for watching the video. Let me know down below in the comments section whether you liked it, hated it, or indifferent about it. And as always, this is Stock Market Education.